The RBA has defied widespread expectations, keeping interest rates on hold at 3.85%. Homeowners have been left frustrated after the majority of economists predicted the first back-to-back cut since the pandemic. Many are now asking why has the central bank halted the reductions and what this means for prospective buyers. For more, we're joined by Sally Tyndall from Canstar. Good morning to you. So the markets were wrong. The handful of economists, the outliers, were actually right. Why has this happened?
Well, the RBA wants more time on its side. It said it wants a little bit more information. Specifically, it's looking for the quarterly inflation results. That measures the whole basket of goods. So, up to this point, in the last 2 months, we've had the monthly inflation data. It shows that we're making fantastic progress. The inflation genie is coming close to being back into the bottle. It's incredible, but they want another round of quarterly inflation results. It's out on the 30th of July. I think then they would be poised to cut the cash rate potentially as soon as August.
So is it, as Michelle Bullock, the governor, said, is it international factors or is it stuff that's happening here?
Well, conveniently, putting it on pause for, the next 5 weeks, let's say, it gives them more time to assess how the last 2 cuts have filtered through to households in particular. We know a lot of people are putting it back into their mortgage rather than to the local coffee shop, right? But it also gives them some much needed time to really better assess the impact of the very much evolving Trump tariffs. And they are really buying themselves that 5 weeks because I think they want that extra time to really understand it a bit better.
So would you put your money on a cut in August?
Oh, look, I think it's a live option. I think it's a strong possibility. Governor Bullock at her press conference yesterday said it wasn't that the board was arguing about, whether or not the next move would be down. She very much confirmed the next move would be down. It was about the timing of the cuts. And I think that 5-week period will be enough to move in August. You cannot guarantee it. If yesterday taught us anything, do not start banking that into your bank account. But I do think it's a very strong possibility.
So what does this hold do to the housing market now?
Yeah, OK, well, would-be buyers might feel a little down because they're not getting that rate cut. But really, at the end of the day, one rate cut would boost an average person's borrowing capacity by, $12,000? It's, 1.8% of the average new mortgage size, right? And people shouldn't really be making a decision about whether they should or shouldn't buy a unit or buy a house based on one RBA decision. Look, a mortgage is up to 30 years. You really need to be looking at the big picture here because there's, 240 RBA meetings in that time of that mortgage. You might see 100 different changes. You need to be able to borrow an amount that you can still pay the mortgage come what may with the RBA.
And only, is it a third of Australians have mortgages?
Yeah.
So not everyone's sad today.
No. Little bit of celebration for self-funded retirees, someone saving for that new home. Look, we've still got 4 savings rates that are offering an ongoing rate of 5% or more, and they're going to stick around for at least the next 5 weeks. So that's fantastic. Shop around with your savings rate is what I would say.
Excellent. Thank you very much, Sally.